Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And we have a returning guest today who appeared back in July 2023. So just over 15, 16 months ago, which was episode 353. Ignacio Salazar, who's the CEO of Highfield Resources, who are an ASX-listed potash company, which focuses on the construction of its flagship low-cost, low-capex Muga Project in Spain, and it's also going to be forecast to be one of the highest margin potash mines globally. Ignacio has a background in economics and law and has worked in the oil and gas industry with Shell before moving back into the mining industry back in 2009. As the CEO of Highfield Resources since 2020, he's going to tell us a little bit more about the company, the journey that he's been through, current update on the project, and also the potash industry and what the vision is for the company. Highfield are partly owned by EMR, who are going to be attending the upcoming IMARC conference in Sydney, which is on the 29th and 31st of October at the Sydney Convention Centre. So there's going to be a link in the discount to get your tickets, so you can meet some of the team and other like-minded professionals at the event. So obviously, be sure to get your tickets soon. Ignacio, welcome to the podcast. How are you doing?
Very good, very good. Thanks, Rob, for the introduction. Very good to be here.
Appreciate you taking the time to come back onto the podcast. Obviously, a lot has happened since we last spoke. And obviously, you're going to tell us a little bit more what has happened. But before we do that, I just wondered if you can just tell us a little bit about yourself. For those that didn't listen to your previous episode, why don't you just tell us a little bit about yourself, a little bit about your career and how your career has developed to what it is today?
Okay, no, thanks, of course, Rob. You said that. I work for almost 20 years with Shell. That was doing mostly new business development and financing, several countries. Basically managed to focus on European countries and South American countries, which makes sense given my profile. And soon after that, 2009, into a gold mining company with operations in South America and looking for other projects, listed in Canada and London. And I was there initially as the CFO and then moved into the CEO, 12 years, 8 of which as CEO. And then for the last 4 years already as CEO of Highfield. No, my background is more on the corporate side, although I spent all my career with natural resource companies, oil and gas, gold, potash now, mining. Well, important, probably after almost 30 years running around from one country to another, finally here in Pamplona in Spain. I originally come from Bilbao, so my studies and as a child, I was born in Bilbao, 200 kilometers from where the project is right now, the Highfield project Muga. So that is after many years finally back practically home.
Yeah. So just wondering if you just give us an overview of Highfield Resources and the background to your flagship Muga Project. And I suppose give us an update as well also from the last 15, 16 months since we last spoke.
Yeah, so basically, you say ASX listed, and that's probably history to be in ASX and the way these things develop. But main project, the Muga project, is very much north of Spain, a potash project, MOP. So we are targeting to get to a production of 1 million tons of potash. And we are now practically ready, shovel ready, as we like to say, for construction. So in the 40 years I've been around, the first two and a half was mainly all about permitting, obviously a very key chapter in every project. And the last year and a half, 2 years was all about the financing of the project. And this is what we will talk about later, the current deal, probably the last piece of that puzzle, no? Going through this, well, tough, very tough period for many companies when things typically derail. but I think we are very, very close to say everything done in this chapter and ready to move to construction. From a technical, operational point of view, contractors, engineering, everything else is in place, access to the land. So very, very happy to see, well, in my case, these 4 years, huge big ticks on the boxes for permitting and financing and ready to move into construction. And when we talk about the deal, I will explain you a bit more, no? Quite a lot more, in fact, resulting from this deal.
Yeah. Well, I wonder if you can obviously tell us about obviously the recent binding deal of 220 US million that you've secured and what it really means for the company.
Yeah. So the financing, this sort of second phase I was talking about in terms of preparing the project was we already had in place a project finance of 320 million euros. And we are adding now, this deal is about 200 million euros. We are talking about now dollars, 220 million dollars of equity, adding to the 320 plus some other leasing that we have. So it's 550 million euros. What we are talking about is a capex of 450, and we have another 100, which is I like to call a buffer, contingencies, cost overruns. So it's a very significant funding for a junior miner like Highfield and for this project. And as I said, this deal is about the 200 equity that is secure. We've gone through the strategic process to get to this point. I mean, it's for such a junior company, it was too much to raise in the market. We were after at least half of that through strategic partners, and in fact we got all of it through strategic partners. So it is what we got out of this deal is this 200 million euros from a group of investors. Plus there is an M&A transaction. We are also bending in the key leader in that investor group, which is Jiangquan asset, Potash asset, also going through the development phase in Canada, and called Saudi, and that asset will be bending in. All of this has been done at a premium to our share price, so we are trading in the order of 30 cents, and this transaction is going to be done at 50 cents, so a significant premium, both full funding of Muga in Spain, plus an additional asset in Canada in the future.
What were some of the challenges and I suppose roadblocks you had to overcome in obviously securing this deal? And obviously, as you mentioned, junior miners are having it tough out there trying to raise finance. So what were some of the challenges that you had to overcome in obviously securing this finance?
Well, obviously, junior miners with our size and probably not enough shoulders or balance sheet to move forward or even to raise capital straight away in the markets. So it was really about getting a strategic partner to unlock that part of the financing, the equity part. And in this case, it had to be really a partner where finding this win-win proposition. I mean, a lot of times people talk about the strategic run the process so you get the money, but this was not so simple. It was all about really getting ways that we were unlocking value for us as the company, for the partner, and for all of us. So I think that is not about running a process and you get to an outcome. You really need to find these synergies and these benefits for everybody participating in the deal. And we really feel that that is what we achieve with these partners. And as I said, probably more than we were expecting when you add the asset in Canada.
Obviously, as I mentioned in the introduction, you've been the CEO for Highfield Resources for the last 4 years. Was this planned? Was this where you expected to be after 4 years of being the CEO?
Well, as usual, maybe the sort of elegant answer is to say yes, but it's always a lot more than what you had in mind when we started. Very much when I joined, it was all about the permitting. So the company had been dragging along for a lot of time, like many other projects or mine, especially in mining, because of permitting. So that was the key driver. I think the company felt, and I think I share that view, that probably financing was going to be more straightforward. I think that was maybe something that was not planned, is financing probably a lot more challenging, like is, I think, a common theme in the junior mining. Plus, I think, well, the circumstances get into this. And it's a very significant project. We are talking about a request of money for 550 million euros when the company has a market cap of more than 100. No? Part of that was the project finance, but the equity part in itself is the 200 we are talking about. No? So that probably was something extra. And I think the result is also beyond our expectations, in the sense that, well, it was all about funding Muga in Spain and getting Muga into production. I think since I joined, in that sense, the strategy of the company was very simple. Get the permit, get the financing, build it, and there you are. No? But now with the asset in Canada, I think that is putting the company in we see, really, honestly, we see the company moving to a completely different phase now going forward, where simply it was not one company, one country, one commodity. I think that we see that with this other asset, we will be in multi-jurisdictions, and with the support of the new shareholders as well, the capacity to grow, a lot bigger business going forward.
Yeah. What advice can you give other junior miners that may be struggling to raise finance? And obviously, you were probably in this position a year or so ago where you were struggling to raise finance. What would you say you've done to make this happen? And what advice could you give others to, apart from obviously persistence, what other things did you
Yeah, well, it is really about persistence and heads down and keep looking for this opportunity. No, I mean, nobody should be under any expectation that this is straightforward, because what I said, you really need to look for, the only way this comes out successfully is this win-win proposition, no? That you can really find ways that the company benefits, but the partner, you have to find obviously a way the partner, the investors are going to benefit, otherwise they are not going to do it, no? But I think typical in junior mining these days is, number one, either you are not able to go through the permit, or if you go through that, you are not able to go through the financing. Or if you are able to go through the financing, you do it via adding some royalties, some equity at a heavily discount price, etc. No, and that is honestly, maybe you would, when you put those three things together, you are covering more, I am guessing, 80-90% of the companies. No, so it's not necessarily, I wouldn't say it's an advice. I think we were lucky as well that you need to be in the right place at the right time with the right people. But obviously, when you think about the current setup of the company, you will see that we've looked for put in a lot of work and a lot of goodwill. And I think we were judgment calls that we made right at the right time, just to get those set of partners, that are going to push the company to a different level finally now.
Yeah. I'm wondering if you just give us an overview of the current potash market, and I suppose some of the future challenges that the industry does face. Obviously, the potash market. What do you see potential hazards that may come up within this particular sector?
We really believe potash business very strong in the long term. Very strong fundamentals at the end of the day is a population growing, request for food growing significantly, while arable land is decreasing. The only way you can be more productive with less land to feed more people is through fertilizers, like potash, nitrogen, phosphates, the NPK, famous NPK formula. With especially in Europe and even in Canada, where the other asset now that we are vending in is a lot of mines, but especially in Europe, very old, getting into decline, and the supply also struggling to some extent. But in the long run, we see obviously very steady demand coming up, for fertilizers. In the a bit more short term, of course, the number 2 and 3 global producers are Russia and Belarus. That was very important through, obviously, following the war in Ukraine and some of the sanctions to Belarus. Europe and some of the flow of potash that used to come from Russia to Belarus to Europe, not anymore, really being supplied by Canada, which is number 1 producer. Number 2 and 3 are, as I said, Russia and Belarus. I mean, between the 3 of them, that they are 30, 20, 20%, so 70% of the market. So very important players. Basically, we saw a big increase on prices a few months ago, and that has declined, and prices have sort of getting lower now because some of the product from Russia and Belarus, in fact, is finding ways through the market. To some extent, Europe, but also flows of product has changed. They are supplying more in India, China these days. Demand has kept very strong, but as I said, supply as well to some extent, and then prices have suffered a bit. We see anyway that things will get improving to and get into another peak on prices around 2026, or 27. So maybe that is what we are targeting, beginning of our start of the production in Muga. And then we are all aware of Janssen, the big BHP project coming on stream, a very significant contributor. But again, from our perspective in Muga, we feel sheltered from that to a big extent, considering we will be servicing mostly the European market. And that is, by the way, the biggest, strongest point of competitive advantage of Muga, to be in the middle of the European market. So we see longer term, very strong market, and we are going through the usual cycles. We hope to get in the right way, with the beginning of the period, the wave going up, and then, a very, as you said at the beginning, very strong project Muga, because of the situation in the middle of the market, where it's so important transportation cost. We will be better, in a lot better competitive position than others. And as well, Saudi, by the way, the new project that we will be acquiring is in the top jurisdiction globally, competing with other projects that are also in that jurisdiction. But our new set of the key point about our project in Canada would be to be able to manage. The quality of the resource has no doubts, is to manage in terms of capital, access to capital, and access to markets. And I think the new set of investors, Asian-based, Chinese-based, will give us both that capital strength and the access to the Asian market that is fundamental for Canada. So we believe potash market very strong, and our company in a very strong competitive position, given the setup that we have.
Yeah. And obviously with the deal that you've just secured with the assets in Spain and Canada, obviously the financing has come from Asia, Australia and Europe. How will these, obviously all these jurisdictions, work together, and I suppose in harmony as well?
Well, I think that tells you see the end result, how we've gone through this process. We really got the piece of the puzzle that made sense wherever it was. And I think we end up with a company going forward, in my mind, very interesting. From the point of view of the assets, we will be based in top jurisdictions, Europe and North America, from an ESG perspective, and from all quality of operations, etc. Not relevant as well. We will have, I already explained a bit of a balance between Muga, that is the project, obviously, that we are going to start construction right away. Very much sheltered because we are in the middle of the market, and Canada because of what I explained, access to markets, given our shareholder base, as well as access to capital. But that said, about the assets themselves, from the investor perspective, obviously a group of very high quality European banks, just to provide us with the project finance, and most of the equity is coming from Chinese, Singapore-based investors. And the main one is Jiangquan Energy, is very well known, especially in Australia. They are behind the setup of Jiangcoal Australia, very successful company, with a significant value creation. They set up Jiangcoal Australia in 2017-18. and a very successful story and very good track record. And we are only thinking about replicating something like that. So a very, very strong miner in China. But the other one that we announced, Beijing Energy, very strong company. We are talking companies with balance sheets in the order of 10 of billions of dollars, no? Just to give you an order of magnitude, especially when you compare to Highfield or junior mining industry, no? And again, capex, annual capex budgets of several billion US dollars as well. Every one of these. Beijing Energy very much focused on renewable energy. Again, Chinese investor, and then Taishon is a commodity trader, very much used to work with bulk commodities based on Singapore. That is a private company. The other two SOEs. No, there might be other shareholders that we expect to join in the way to completion, but it's going to be very much Asia focused. No? So we really found the funding and the assets and the setup wherever it made sense, and we could see whoever can contributes, and obviously looking to get that win-win for everybody, indeed.
And what are the final steps to completion of the deal, and when are you sort of ready to go?
Yeah, so what we announced a few days ago is that the deal is obviously signed and sealed with these new investors, and and that implies the funding of Muga plus the vending of the Canadian asset Southie. Now, what is happening from now to completion that we are expecting beginning of 2020, another few months, will be mainly, it is about the regulatory approvals. These SOEs and investors from Asia investing in an ASX company with assets in Spain and Canada. So there will be a FIRB approval in Australia and China approval as well for these investors to invest overseas, and then Canada and Spain approvals related to the change of ownership. We think all of them very reasonable to achieve, in the sense that Australian firms should not be, not only they are used to young coal Australia as a precedent, but also our assets are not in fact in Australia, so it should be straightforward. China as well, they've gone through their own internal approvals already to some extent before signing the final agreement, so it's quite a lot ahead of us. Spain is very obviously foreign investment in the country. But that is, to be honest, the one probably more sensitive from a political angle in terms of Chinese investors in an asset in Canada. Well, the only thing, in fact, these days, Jianquan owns through a private vehicle, 100% of the asset in Canada. So this will only become now owned by an ASX listed company with obviously additional reporting and governance, etc. And the Chinese part of the shareholding will only be reduced. No? So even from that political sensitive angle, going in the right direction for the Canadian interest. No? So those are the key elements to completion, and we are all obviously working diligently on that. Hopefully we think it's a process that we'll go through, and obviously we are very keen to do it. The quicker the better. Then is obviously shareholder approvals in Highfield, but we plan to do that while we are going through these regulatory approvals in these 4 countries.
Yeah. And lastly, what's your vision for the new Highfield Resources company, having secured obviously this capital and progressing with the project and projects? What's the vision for the company moving forward?
Yeah, well, we were last week in Australia and explaining this to shareholders. I think for us and for them and for everybody, I think we really need to reset, a mind reset, to be honest. We are going to change dramatically. It's not anymore a junior mining company, one jurisdiction, one listing, one project to get through, that with a very clear way forward. Once we are ready for construction, was about all building Muga, etc. I think now we will have another asset in Canada as well. So obviously next step is going to be the same, is to build Muga. Very much the idea and the principle is that Jianquan and the other investors saw that with our track record in permitting financing. And also, as we are building Muga, the Saudi asset is a bigger asset, is potentially is more money at risk. So the track record of us building Muga will be extremely critical. So the company is going to build Saudi after that. And then we will count, as I said, with very strong support from a capital point of view with the new shareholders and the vision for them as well to do a lot more. And we will be competing now, once we are with only these two assets, and I'm sure there's more to come with that sort of support. We will be 6th, 7th global player globally in ranking at the level of K+S or ICL these days. So there is also, to get there, not only building Muga, building Saudi, but also from a corporate development side is already quite a lot of thinking. I mean, some of the lessons from Jungle Australia, for example, Hong Kong listing, and which would make a lot of sense in our case going forward to provide more liquidity and to support share price going forward. So it's going to be quite a lot of work, but we will be moving into a different, let's say, game, if I can call it, a business proposition to shareholders, but very confident that we really have the ingredients to make it successful. In my mind, it's all about you need to have the capital, that I think with this new shareholder base is something that we can rely quite a lot for doing this and more. We will need the capital, as I said, the assets, very high quality Saudi asset from a geological point of view, geology and reserves and resources, as well as Muga, given the location in the middle of Europe, and the team that I think we proved ourselves going through this process, and the team growing only bigger and stronger as we are building Muga. No? So the very, very strong competitive position to make, to become a global player in the potash industry, which is, coming back to some of my initial comments, beyond the expectations that I know that I had when I joined the company. So very keen to see things moving into completion, and after that, going through this path, plenty of work, but plenty of excitement as well. No?
Yeah, great. Ignacio, thank you for your time. Appreciate you give us an update on, obviously, Highfield Resources. Things are obviously moving fast now in a positive direction, especially with the financing. So obviously wish you well for the remainder of the year, and then obviously going into next year, going into the construction phase. Hopefully you can come on the podcast maybe later next year and give us an update on the progress of the project.
Absolutely, always a pleasure, Rob.
Yeah.
Here. Thank you.
Great, no worries. Well, all the best for the future.
Thanks a lot.
Thank you for listening. I hope you enjoyed the episode. As always, appreciate if you can share this episode far and wide. As I mentioned, we recorded an episode 15 months ago. So maybe have a look at that episode and you can see how far Highfield Resources have developed from then to now. So it's also good to go back to see how far they've actually come as a company. And obviously they're going very far now with this additional financing. So thank you for listening. Appreciate if you can share this episode far and wide with people outside of our mining industry, not just people within our mining industry. Potash is obviously a commodity that I suppose not many people necessarily know much about, but hopefully sharing these episodes, people will get a better idea of what potash really means to us, and it's obviously what it's used for. So thank you for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.